this market has been under pressure over the last few sessions. Today it's down again. Yesterday it was down about 0.2%. And obviously there's the issue of earnings season in Nigeria being a bit delayed. I'm hearing now it could take another 2 to 3 weeks. If we see the delay, to what extent do you think this market can trend lower?
Thank you very much, Wole. It's actually difficult for us to estimate the extent to which the market can go down. But the first question we ask ourselves is, why is the market going down now in anticipate when we actually have entered into earnings season? After this month, we should be expecting a number of banks to release their earnings to the market, or their companies across the sectors. But speaking with some institutional investors, foreign investors, there are some fears about the elections, maybe a possible repeat of what is currently happening in Libya, what has just happened in Egypt, in Cote d'Ivoire at the moment. But we think, and so at the moment they are trying to reclassify the investment or adopt a kind of a wait-and-see approach. But we have always been telling them that these are not major issues in Nigeria. The events over there are quite different from what we have here. But I think as soon as banks' earnings, companies' earnings are beginning to come to the market will pick up again.
So you expect a sharp rally?
I think so. Not really sharp rally, but
at least stability.
Yeah, stability and appreciation.
All right, but let's talk about the earnings season. We expect the likes of GTB and First Bank, rather GTB and Zenith Bank to kick things off. Perhaps we'll hear from Access as well very soon. If those two come out and set the tone for the earnings season, what are your expectations from those two banks in particular?
Recently, the Nigerian Stock Exchange notified the market that they got information from GTB about that they're going to hold a board meeting to possibly consider the declaration of dividend for the financial year ended December 2010, and alongside with bonus. It's possible for them to declare 1 for 8, right? That's just speculation. Right. Again, they have the capacity to pay a dividend of about between 75 kobo and 1 naira, given the fact that they appears to be the bank within their comparable that has the lowest number of shares in issue, between 2 to 3 billion. So even if they give 1 for 8, and they can still be able to declare about 75 and 1 naira dividend. For Zenith Bank, we do not expect them to declare bonus because they have about 33 billion shares in each at the moment. That's too large for them to declare that bonus. But I think they have the ability to declare about 75 kobo. So we think if this happens, there is tendency for the market to react positively to this, just like it reacted to the declaration of bonus and dividend from Nestle.
Nestle, of course. And then let's talk about M&A, because that's obviously a big issue right now in Nigeria. We've heard all kinds of suggestions in the press and from other market operators as to who is buying who. One that stands out for me is First Bank on Oceanic, and I wanted to get your views on that. We just discussed it on the polls. What are your thoughts on that combination, the impact it will have on First Bank? Does it make sense?
Absolutely, I think it makes a lot of sense. At the moment, First Bank is one of the banks that has branches in rural areas, so it's trying to encourage rural banking, which is in line again with the central bank policy and initiative. If you now compare it with Oceanic Bank, just like you said earlier, Oceanic Bank has very large branch network. Before the crisis in 2009, it was rated among the top banks in Nigeria. So now, then following the problem they had, and they have negative shareholders fund, I think if the two of them come together, the two of them have good values, good brand name, large brand network, and it may give them opportunity to actually close down some unprofitable branches and still be able to have a large dominance on the banking space in Nigeria. So for the two banks, I think it's a good one for them. At the moment, Oceanic Bank is looking for injection of capital or an acquisition. Okay, so if he's going to marry, so to say, First Bank, that is the leader in that market, it's a good one for the shareholders of that bank. For First Bank, I think it's a good one for them as well. Coming to acquire a bank that has so to say, large assets, large branch network like themselves too. So I think it will help the two of them to, actualize their vision of, enlarged branch network, and especially beyond the cities in the rural area of the country. I think it's a good one.
Right, but what about the stress of integration? Because we've seen that in the past. In 2004, when we had the consolidation of the sector from about 89 banks to 25 banks, integration was one issue that I think some companies struggled with. What are your thoughts on the impact that would have? And isn't that a risk for that potential transaction in your view?
I mean, I spoke with a couple of foreign investors recently, and I told them Nigerian has learned the operators in the industry have learned their lessons. The first one, I don't see integration, both human culture, IT integration this time around to be as difficult for them as the first one. Remember that this bank, the Shiny Bank we're talking about, and even across board, I think it was only Zenith Bank and GTB that did not acquire or merge with another bank at that time. So there has been a considerable lessons, experience from what happened in 2005, 2006. All right, so I think the issue of integration this time around will not be a major issue. And again, the fact that the stress test they did it some time ago, which the regulators are on top of the game now. So I think it's not going to be a major issue for them.
We'll wait and see, although many will argue that these are much larger transactions compared to what we saw in 2004.